Hey, what's up, everybody? Welcome to the Average Joe Dividends YouTube channel. In this video, I'm going to show you the dividends that I received for the month of January. This morning, I got my last two dividends from JP Morgan and BST, so I can now show you the proof of those dividends. We'll also look at historical dividends I received over the past 4 years, and we'll see where those dividends are going for the future as well. We'll dive into the different positions I have in the portfolio as well, and we'll even look at past performance of the portfolio. We can see over the last year the portfolio is up 16.78%, but when you add in the dividends, it's at 21.14%. We'll just look at the last month because this is a monthly video that I show you the dividends. We'll see over the last month how we've done, and we've gone up 2.46%. So we've had a modest return from the portfolio over the past month as far as it going up in value. So not only is this portfolio returning dividends each and every couple days, it's paying dividends, it's also appreciating in value as well. Just to go back to the 1 year view, we can see what this portfolio has returned as far as dividends: $11,613.53. And this is continually building, it's going up. And just over the last month, it's not accurate because of the timing of it. I'll show you what I actually received from January 1st to January 31st as far as dividends. So let's go into the activity log. I'm going to show you the proof because a lot of other YouTubers, all they do is they just read to you from a spreadsheet. I want to show you the actual proof. We're going to the activity log of my taxable M1 stock brokerage account, and we're going to filter this by activity type, dividends only. And we're going to go from the 1st of January. In this case, it started on January 2nd. So I'm just going to read these off. We're going to go through these, and again, showing you the actual proof of the dividends going into my account. And right now, my current strategy is I'm reinvesting those dividends back into the same company. So for example, ADP is the first one for $4.43. What I did was I just drip that dividend right back into ADP. So we'll read these off. So in the second, I received these dividends from ADP, $4.43, and then HP paid me $7.39, and then Allstate $6.08. Then on the third, Kimberly Clark, that paid me $12.36. And then on the 6th, Pepsi paid me $17.02. And then Merck, that paid me $10.81 on the 8th. And then on the 10th, Illinois Toolworks, $8.81. O Realty, this is a monthly payer. On the 15th, it paid me $13.32. On the 15th, also Fifth Third Bank, that paid me $19.30. And then Digital Realty on the 17th, that paid me $8.78. And then Cisco, $12.55 on the 22nd. And then Oracle on the 23rd, that paid $5.53. And here are the last two that I received this morning. And M1 has a 1-day delay, so technically it paid me on February 1st, which is today, but it actually should pay on the 31st, and that's how I count it on my tracking sheet. So BST, a monthly payer, that paid me $503.25, and these two last dividends I'm going to show you, instead of dripping them back into BST and JP Morgan, I may just let Auto Invest do its thing, and after we get off the screen, I'll show you what I mean, and then we'll go to my Google Docs spreadsheet to show all of the dividends and count them up. But BST, again, that paid me $503.25 this morning, along with JP Morgan at $8.40. So you can see the proof there. There are the dividends right there. And then let's go to the portfolio. I'm going to show you what I mean. What I did was I changed the way that the dividends are reinvested. And so I have Auto Invest on. And then the way the dividends are treated I'll have to find it where where we can change that, but we're not going to change that right now. I'm going to show you how I'm doing it. I changed it to do an auto invest instead of just dripping the dividends back into the portfolio. Again, I may change it, but at least we can see where that 511.65, again, that's from BST and JP Morgan, that is not yet been deployed because I received it on a Saturday morning when the markets are not open. But let's just see where it could go if I keep it on auto invest. And this is based upon my allocations within my pies. And of course, what's underweighted is where the money's going to go to. So here's where it's going right now. And this will change because when the markets open, things will go up and down. But most likely, this is where it's going to go, or most of it. And into SCHD for 200 bucks and then BST. So part of it will potentially drip, which I like, but it's also going to portions of the portfolio where it's underweighted. And when SCHD pays its next dividend, it's going to be probably at least $800 around there. That's going to be even a bigger um, a bigger amount that's going to go into the whole portfolio rather than just to SCHD. And I like to see how this is kind of spreading the wealth around a little bit to the individual positions as well, because it seems like BST and SCHD and the months, especially when SCHD pays, it's the bulk of what's paying. And every month BST seems to be the bulk of what's paying me every month. So that's just an idea and kind of kicking that around. But here is where it could potentially go if I just use auto invest for and the dividends not dripping into the portfolio. But we'll see. But if it stays like this, I just may do that, and then it'll bolster the SCHD position. And especially in Q1, SCHD pays a lower dividend. This would maybe help the next dividend be a little bit higher. With it's going to buy almost it'll be SCHD is right about $28 a share. This will buy like 7 shares ish around there, if my quick math in my head is correct. And so let's go on over to my Google Docs spreadsheet, and I'll leave a link below so you can see what's all in this portfolio and see what's in the three slices. In my holdings tab, there's 52 positions in the portfolio. SCHD is the largest at over $100,000 of the portfolio. That's at $277,000, and then BST is the other big chunk. So over $170,000 of it is just those two alone, with AbbVie and Nvidia being like the largest individual positions in the portfolio. But you can see though it's well diversified. The portfolio is, it's in tech, it's in it's in real estate. There's a REIT right here. It's in stores, it's in energy, banking, even waste management here. For like trash collection, restaurants, and snack food items, and more financials with American Express in here, more restaurants and stores, and producers of like home goods like Procter and Gamble, which is almost an ETF in of itself with all the product lines that it has. Same with like a Coca-Cola or Pepsi. They're well diversified out of just the cola that's in their name. Same with the Hershey's. They're not just chocolate. But you can see this is a very well diversified portfolio. It's almost like my own ETF that I've created, because things like SCHD does not have an Nvidia in there. There's no REITs like Realty, and they dropped out things like Broadcom. That was a position within SCHD that was dropped. So that's why I have these other positions in here, and it's of course investing is a choose your own adventure. You get to do what you want and pick the investments that you want. I'm not offering advice. I'm just showing you what I've done to create this dividend portfolio. You can go back to the old videos and see what I was doing when this portfolio was under $20,000, and you can see all the moves that I did to get it to this current value. So onto the Google Docs spreadsheet. On the spreadsheet, I track everything on this tab that's in the taxable M1 brokerage account. You can see the company, the ticker symbol, the share price using the Google Finance function to pull the price live. Here is the price, the average share price I bought into, the number of shares I own in each position. The current value, the cost basis, here's the gain or loss in dollars, including dividends. Here's the percentage gain or loss. You can see with KKR, I've done quite nicely. Amgen, I'm still in the green there, made some money with it, but Hershey's, I've lost money in it, at least so far. I'm going to stick with Hershey's and keep buying more and dollar cost average into Hershey's because I believe long term, at least what I'm doing and what I think, it's a good long-term investment. And here's the dividends paid per share. So really to calculate the next dividend, it's pretty much the number of shares times the dividend. It's that simple of math. And here is the current yield on cost. Everything on this sheet is arranged by the pay date. We're going over the January dividends. So here's all the January dividend payers that I read out. They're in the light green. And to explain the color coding I have here, we're going over January. So it's in the first month of the quarter. We're in Q1 2025. So all these companies in here in the light green, these will be paying again in April. So it's just going to redo itself. And the next dividends are going to be even higher. And I'll show you why that is. They're going to pay in July, in October as well. There is an anomaly though, because Pepsi does pay out. They will go into the dark greens and pay their next dividends, I believe, in June and September. Let me show you what I mean by that. So Pepsi, sometimes you have companies that will be in paying in a certain month and then they change. Let me show you what I mean. We'll go to dividendinvestor.com. Real quick, we're going to pull up Pepsi and I'll show you what I mean by looking at their dividend history. Go with Pepsi. Take a quick drink here. Throat was getting dry. Still getting over the cold a little bit. Go to dividend history detail. Look at Pepsi here. So we can see the date here. January 6th, of course, on my sheet, we're going to show it as January 7th. We'll go back over there. Because what I do, again, I add the 1 day in there because M1 has a 1 day delay. Yep, you can see it right there. So, but let's take a look and see historically what they've done. We can see last year they paid in the first week of January and then April. So they're going to stick to the light greens like on my sheet. But then they pay in June in September, so they're going to jump to the dark greens. Just kind of want to show you Pepsi is a little bit of an anomaly. So their dividend is going to be removed from the, let's take a look and see, back to the key. They're going to be not in the July and October. They're going to be back into, they're going to be in the June, September. So it's going to lower my dividend a little bit in that light green those months a little bit because Pepsi will be out of there. So I just kind of want to show you that kind of things to look at when you're investing in individual positions like this. You'll have some anomalies, and Pepsi's is one of those. But let's go over the total dividends that were paid to me in January. We'll do that count up, and these are the actual dividends that went to my account, actual money. And, you know, not looking forward or anything like that. People do that too. Like, here's the dividends I will be getting paid. Here is what I got paid. And we can see the sum here at $638.03. So let's take a look at what the next dividend is going to be, though, with those dividend drips. So of course, this does not include the BST JP Morgan, but remember the 638, and then the next time these pay, here's I'll be getting 643. So you see the difference, and this does not include if I was dripping in BST, it would be another $3.25 adding to that. So we'd be at 640 6, but rounded up 647 with that 3.25. So 647 next time compared to the 638. So you can see how those dividend drips, those are kicking up the dividend. And also we're going to have a dividend raise with Allstate, and last year it was 3%. And then we have another one in here as well, which is Cisco at 3%. So hopefully both of those can kick up their dividend, so it'll be an even larger dividend than the 647 I was assuming. So it'll be probably 648 or more, because we're going to be buying more fractional shares of these as well. Excuse me, I had to cough there real quick. But so let's move on to the next tab here, the dividend tracker tab. So I've carried that 638.03 over here. That's where that's at. So let's go back in time to January 2021. I started doing these videos. Here's the portfolio value. And this portfolio started pretty much just from extra money that I was making, like selling things on eBay, and then just keeping the money. I just gave myself a little allowance to kind of spend on money on things, and I wasn't spending that money, and I was putting it into this M1 portfolio. And that's why I had some pretty modest, you can see the deposits were low, just a few $100s. And but I didn't start really turbocharging this portfolio until right about here. I had equity in a home I no longer own. I deployed that money and really kick-started this portfolio. But if we take a look at how much I've deposited as far as the money, let's just take a look at this. This is realistic, where someone could do this starting from from zero. And the average that I've contributed to the portfolio per month is right about $3,800. So if you're starting from from nothing on this, and you gave it 4 years, you could be at this level with a dividend portfolio or whatever portfolio you're trying to invest in. But let's just take a look at the dividends again. The 638.03. Let's just do some historicals from the last January. So you can see the first one, January 2021 was 37.41. January 2022 up to 48.99. Then January 2023 up to 532.28. January 2024 611.08. But then again 638. So you can see how it's going up every single year. We can see where the average monthly dividend is at for the portfolio. This is like a monthly paycheck from this portfolio I could draw from. Of course, it doesn't pay an even $1,036.98, and you can see just on the first months of the quarter pays the lowest, and January is one of those. So January, February will be a smaller amount, and then March will be the last month of the quarter. That's going to pay a large amount. It's going to pay more than the 1446. I think it's going to be in the 1500s, maybe even getting to 1600 in March 2025. We'll see what it's going to be. But you can see in the month of January, I increased that monthly dividend by $2.41. That's $2.41 every month going forward, and that compounds. That's part of the compounding that just keeps buying more and more shares of dividend-paying stocks. We can see here is the dividend, the annual dividend over here at now at 12,443.79. Excuse me. And here's the annual increase just in the month of January, 28.95. Here are my deposits for the month of January. So we'll close out the video and we'll take a look at my current net worth statement and see how it closed out for the month of January. And we can see here at Vanguard, this I'm showing you the other 85% of my current net worth. This is 15% of it. Just about my dividend portfolio is represented on this line right here. So we'll go over the other things I built up before doing this dividend portfolio, and that was with an IRA, a traditional IRA, a Roth brokerage, Roth IRA, and a taxable brokerage account over here at Vanguard. These are all in boring Vanguard ETFs, boring but very effective ETFs, I may add. So some of those at $483,000. And then over at T Row, this is my current employer 401k. It's in an S&P 500 index fund at 103,000. And then M1 Finance, I store my IRA from my working career from 1996 till 2019, and that's valued at 717. And then again, here's my dividend portfolio. Excuse me, I'm coughing again. Still getting over this cold. I apologize. And then M1. Here is my 1 year emergency fund, and it's getting 4% interest over at M1. Here is my 6 month emergency fund over at Synchrony, getting 4.1%. So all the new monies are really going over here. So what I do is my current strategy is to have a $10,000 cushion in my Capital One account. You can see I recently just pushed out money to have that even 10,000. And what I do is I push it to Synchrony because it has the higher interest rate. It used to have a higher interest rate over at M1. It was at 4.25% for a while. They lowered it when the interest rates were lowered. Synchrony lowered theirs, but theirs has been slightly higher. I just haven't moved anything out because you lose money when you're moving money around. You lose money in interest, that is, because it's once it's in the ether, you're not getting interest for those 2, 3, 4 days, whatever it is out there. So I'm just leaving it there for now. But here is my home value. I just used Zillow this time. I was using something that I think it was called HomeBot. It was showing a higher value. I'd rather show a lower value actually. So I went to Zillow on that. And then liabilities are just right now my mortgage at 6.25%, which is not great. I bought the house recently, just about exactly like a year ago is when I closed on the house that I'm in, and the value I bought it for like just under 303,000. So it's quote gone up in money a little bit, but of course by the time I sell it, you have closing costs. I would lose money on the house, but I intend to hold on to the house and live in my area for a while, and actually want to pay this house off really soon because that will really lower my expenses. And once my son is done with college, my expenses are going to be really, really low. So here's my net worth, subtracting out my only liability, which is my house. So just over 1.8 million, but we're not at the all-time highs. For my current net worth, in November actually was the high point. But here's my net worth divided between stock, home equity, and cash. And I have it divided by pre-tax, after tax. And then U.S. and international. Here is my average monthly dividend. Say I was 59 and a half years old, I would have access to my IRAs as well as my 401k. I could draw from them penalty free, and I could draw the dividends if I were able to do that. And this is counting my interest and also my taxable brokerage accounts. Here is what my average monthly dividend would be, close to $3,500 I could draw just in that. And that's not selling any shares, just the dividends and interest. I could draw that. And with my house paid off, I could easily live off of that. But by the time I'm able to access that, this is going to be a lot higher than this 3,500 approximately for my average monthly dividend. I think it's going to be closer. It's going to be over 5,000, and by that time, my expenses are going to be well below 5,000. Because I live pretty frugally, I live pretty simply, and so that's my plan is just to live off of the dividends alone, and that's why I built this. One of the reasons I built this dividend portfolio over here at M1 was COVID made me really think about when the market drops, you really can't retire. You are kind of a slave to what the market is doing. So I wanted to remove that factor of my freedom depending on what the stock market is doing. And even when during the Great Recession or the Y2K, when the stock market was dropping like crazy during those events, these companies were still paying their dividends. So I would still have income in there. So it really wouldn't matter what the stock market is doing. And that's why I wanted this dividend portfolio, was to just pay for my expenses, and I wouldn't have to worry about what the world's doing or anything like that. I'm collecting money to pay for my bills. So that's all I had to show you guys, was primarily what I got for dividends, and to show you guys the actual proof. And going over it again, here you can see the companies that all paid me the dividends and what those were for the month of January. And again, it was 638.03. And so we'll see what my next dividends are for the month of February. I'm expecting, again, well over $600, because I've just been buying more and more fractional shares of those same dividends of the groups of stocks that are in there. If you want to see what those stocks are, you can see KKR. They have not announced their new dividend, and once they do, it's going to be in February, approximately the 20th. We can see all the other companies, they've announced their new dividend. And then what's going to happen here is, like, for example, BST, that's going to be paying me at the end of February. And we'll see, let's just look at it. We can see 28th is going to be the next. We can just change this here really quick to 28.25, and then O. We can just grab the new dividend date there real quick. And this is just what I do to kind of clean up my sheet for the next month. What I'll do is then I will get it ready for February. So we'll look up O. O has already announced their new dividend, so we'll update the sheet and put in their new dividend date, which is going to be, the pay date is February 14th, but there's a 1-day delay. I always add that one extra day in there. So we'll put O at 2:15. Then what I do is, then I just rearrange it. I will just sort these again by the pay date. It'll throw O and BST in here, and then I just have to wait for KKR to announce their new dividend, which they haven't. And then the process just repeats itself. I'll start getting these dividends, but what I have for next dividend can differ. Sometimes it can be lower, because I have, for example, if I bought fractional shares of Verizon or whole shares, whatever the case may be, after the X dividend date, then it will be lower. But you can see approximately what I'm going to be receiving for these next dividends. So thanks everybody for sticking to the end of this video. If you got value from it, please click the like